So basically, when trading, we are trying to use TA to predict where we can buy at a good spot to sell it higher, or to sell at a good spot, buy it back lower. Some of it can be somewhat random, but usually there are systems and algorithms, certain scenarios which will make price going up or down, more likely or not. So some very simple concepts. This is a low, a local low. This is a local high. We call this a higher low because this low is higher than this low. This is also a higher low, another higher low. We can call this a lower high of this high. And this is actually a higher high of this high, but lower than this. So let's say some people bought here, sold up here, but most people probably missed this one. And then very often, at least in a trend like this, we are expecting that if they go back again to the same area, then we can buy it again and it will continue the uptrend. So this is a higher low. One of the reasons for it to not go lower than this is that people saw it make a new high, higher than this. So they are expecting when if price is going back to the same area, that many people would buy it here. They are also interested in buying it here. But you see here, they actually didn't go all the way down again. So people are front running this level. That means that they are buying a little bit higher to not miss out on the trade. And in an uptrend, we actually want to make a higher low also, at least for the close of the candle. Sometimes they can wick below and stuff, but usually we want to close higher, at least in higher time frames. So buying here, we are expecting price to go up again. They might take some profits here. Most people taking this long, this buy, will most likely take profits here. That means if you bought here, they are selling all or some of the assets they bought here. For profit taking profits, selling. It can even be shorting, but we can look at that later. And you will usually do that before the high. So you're looking for a lower high to take profits. They can break this, but you take profits on a trade. And difference between here, you will earn profits. Let's say that if you bought one BTC, so this is a Bitcoin chart. If you bought one BTC at 13K, and you sold the one BTC at 13,600. If you sold it all, you will make $600 on this trade. So you traded the range for a higher low and a lower high, with expectation for price to go down again for another higher low. In this case, it worked out if you did. Expectation is still to go up. In most proper exchanges, you can also do something called shorting. Then you're not buying, but you're actually selling something you don't own to buy it back lower and make money on the difference that way. Or you can do both. So yeah, trading can be very interesting. It is a system behind how price is moving, but it's always an if-then. So you cannot predict price with 100% certainty where it will go. And that's the main idea by doing TA, that you want to learn how to predict where price most likely will go, with the most likely direction and most likely area they will react to, like this. So if you saw that they couldn't break higher here, sold here, you want to buy in this area for a higher low. Take profits here, since this was the area they jumped from earlier. So yeah, just trading. There are a lot of tricks, a lot of things you can learn about the price action. So how price is moving from level of interest to level of interest, and when it's more likely to go up or down. So we will look into this in the videos coming up.